Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Shares of Target have dropped more than 50% since their peak during the pandemic, but this is a retailer that I think is really attractive for a number of reasons. And I want to go over the three predictions that I have for the company and how we should think about this stock going forward. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing. I have a link to that in the show notes. And I'll start with a quick overview of Target and some of the metrics to understand about the company. This is an overview on a platform called Koifin, has all kinds of financial data available. And Target's market cap today is $56.5 billion. Like I said, stock is down over 50% from its peak in 2021. So that's a pretty sharp drop for a company that is typically not all that volatile in the market. Enterprise value, $74 billion. Price to earnings multiple on a trailing 12-month basis, 16.8, and on a next 12-month basis was 14.4. I will come back to that in a little bit. The other thing is a dividend yield of 3.6%. So pretty solid dividend yield, although you can find better dividends on the market. The one prediction that I have from an operating standpoint is that Drive Up is going to really drive this business in the future. This is the most recent earnings report. You can see that comparable same-store sales fell 5.4%, but same-day services grew nearly 4%, led by a 7% increase in Drive Up. If you are not familiar with Drive Up, this is a service where you order your goods on the Target app, and then you drive up to the store, say that you're in a parking spot, and somebody just comes and puts the products in your car. Now that Target has a wide selection in the grocery side of the business, and the app is a lot better than it was, especially early in the pandemic when they had all kinds of weird inventory challenges. If you were actually trying to buy things and they were in the store, but the app didn't necessarily know what inventory levels were. That seems to be figured out on a technical side. And now what they're doing is refurbishing a lot of their stores to make the Drive Up experience a lot better. So you can essentially do all of your grocery shopping, never have to go into the store. And at the same time, they're rolling out Starbucks pickup along with your Drive Up order. So if you're a busy parent like I am, you can go do your grocery shopping, swing by a Target, get a coffee at the same time, and never leave your car. I think that's the kind of service that other online retailers are just not going to be able to compete with. And especially in the urban and suburban environments that Target operates, that's going to be a huge value add for their customers. So I think this is going to be the piece of the business that really grows long term. I don't necessarily think the in-store segment for Target is going to be a high growth business, but if Drive Up can grow 5, 6, 7, 8%, that's going to be phenomenal for Target long term. The next prediction I have is that Target is going to be a leader in autonomous delivery, not necessarily delivering these goods themselves, but connecting you with autonomous vehicles. This is just one example. This is a cruise vehicle that is being tested right now, and they can put this module in to actually have goods that can be shipped to you. They call this origin for delivery. So this could be Cruise, it could be Neuro, it could be Waymo, but I think it makes a lot of sense for people to order their goods on the Target app and then actually have it delivered and utilize these vehicles that can operate at about 20 hours per day, utilize them in off hours to do deliveries. Now the question would be, how do you get from, let's say, the street or the entrance to an apartment to somebody's doorstep? That's a question that I don't think we quite have an answer to yet. But the advantage for Target is they have all this inventory local, it's close to customers, and so they can do that last mile with something like autonomous driving. I think that could take the company's growth to the next level, especially now that they have the services like Drive Up. I mean, you have the people picking the goods in the stores. Why not just fill an autonomous vehicle rather than filling a vehicle of somebody driving up into your Drive Up stations? The third thing with Target, and this is something that I think may be surprising, is that I think the value add for the company is going to be through buybacks. This is going to be something that I'm going to be watching closely for a lot of companies. But look at Target's shares outstanding over the last 10 years. 640 million shares outstanding in 2015. We are now down to 640 million shares outstanding. So one of the ways that Target can add value is by simply buying back shares. So you get a dividend and you get those buybacks. Remember, if we go back to the snapshot, the next 12-month price to earnings multiple for Target is only 14. So that's not a very expensive price to earnings multiple. If the company continues to use the cash that they're generating to return that money to shareholders, that can actually be a yield much better than the dividend yield of 3%, 3.6% that we see here. So look for that to be something that Target continues to do. The great thing about a retailer like Target is it's very sticky. Customers start to use the app, start to go to the store, and they develop habits. Over the last 3 years, we have seen habits change with Target. People are using more of those same day services. And what's great is that it doesn't seem like those sales are reversing. People didn't start using Drive Up and then stop using it when the pandemic ended. They're actually using it even more. So I think that could be fuel for Target's growth long term. Then if you add things like autonomy and buybacks at a reasonable valuation, I think this is actually an attractive time to be buying Target stock because it has really figured out its niche in the retail market. I like to call it grocery plus. You might go to Target for groceries, but you might pick up some other goods at the same time. So what do you think about Target and its strategy in the future? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.